Okay, I had a request for doing a video on day trading ES. It's the S&P 500 E-mini future. Okay, what I've got here is tradingview.com. It's a charting package. You can sign up for free. And in a little bit I'll show you why I use this and why I would recommend that you sign up for this. Now, with stocks, everything's real time, but I did notice that it is delayed 20 minutes for futures, but that's okay for what we're doing here. Okay, and again, this is for day trading. So the longest time frame we really care about when we're day trading is the hourly chart. Okay, because as you can see, I mean, we know on the daily chart right now the market's in a real strong uptrend. Okay, but if you're only going to take trades, long trades, then you're going to miss out on this trade right here. You're going to miss out on this trade here. You're going to miss out on this trade here. So again, this is based off the hourly chart. As you can see, this chart goes from about the 27th of June through the 13th of July. So we've got a good 2 weeks. Now during that 2-week period, just trading off of supply and demand zones from the hourly chart, you've only got 7 trades. So that's an average of 1 trade every 2 days. So obviously, if you're day trading looking for action every day, you're not going to be able to trade just strictly off the hourly charts. But this is something you definitely want to have these zones plotted, because that's a trading opportunity. You did have 7 trading opportunities during this 14-day period that are off of the hourly chart. Okay, these zones that I have drawn here, yellow ones are strong, fresh zones. Means they've never been touched before. The magenta ones, like this one here, once a fresh zone is broken through, like in this case it was a supply zone, but price broke through it. Well, once price breaks through it, it's a demand zone, and when price returns back to it, you have another trading opportunity for a long trade in this example. And actually I missed this one. We've actually got a long trade right there. Okay, because price broke through it, price pulled back into the zone, and then we have our long trade. Okay, on some of these, like this yellow zone down here, we've got a huge wick on this candle. So you really don't know where to put the top of your zone. So I usually put it about 3 to 4 points. And what I do when price comes back in, like in this area right here, then I'm going to look for some type of confirmation on a lower time frame chart, like a 5-minute chart, or maybe a 500 tick chart or a 1,000 tick chart. I'm going to look for a bullish reversal candle or pattern and enter. As long as the price is in this zone, I'm going to look for a reversal pattern in order to enter the trade. Okay, unless it gets within my risk parameters. So I normally don't like to risk more than a point to a point and a half with slippage. So I shoot for a point when trading ES. So if price doesn't make it down into that parameter, the bottom of this is 2402, so we'd have to price would have to come, I'm sorry, that's not 2402, it's 2402.25. okay, so at 2403.25, price would have to get to that level for me to take the trade without any type of confirmation, because then my stop's going to be just slightly below the bottom of this zone. And so if it continues to go through, then I'm going to get stopped out with a point to point and a half loss. Okay, but if it comes into the zone and then we get some type of a bullish reversal pattern, then we can take the trade, and the stop would be just right below the bottom of the candle that has the bullish reversal pattern. So again, we're not risking that much money. Okay, again, the yellow zones are strong fresh zones. The magenta are strong zones that, or any zone that's been broken through. Okay, the cyan zones, these blue or bluish cyan zones, what I do is when I have a supply zone or a demand zone, price comes back to it and bounces off of it hard, moves away from it hard. That zone is no longer fresh anymore because price touched it, but because it moved away from it so hard again, I keep that zone there, and I change the color to cyan. Okay, so that I know, like at this area right down here, when price comes back to there. Now again, I'm not going to take it, if it's not a fresh zone, I'm not going to take it without confirmation. So I'm going to look for some type of reversal pattern before I take this trade here. Okay, or depending on how it's moving, I may not even take it at all. Your best trades are always going to be against the yellow zones, the fresh zones. Okay, this is really kind of marginal right here. Technically, I shouldn't have drawn this as a fresh supply zone, but the reason I did is because price action moved away from it so dramatically, and it broke through previous demand. So that typically would make this a real strong zone up here, even though it's a part of this other zone up here. So it turns out, I could have traded it for 4 or 5 points maybe, but it didn't hold as strong as what I would have normally thought that it would have. The other thing you got coming against you is you did have price action come up fairly close to it here. Okay, these red zones, these are zones that you may be tempted to plot, but they're not really, but they're not valid zones. Okay, and there's a reason for this green arrow here, and there's a reason for this red arrow here, and I'll show you that in a little bit. Okay, but just strictly plotting supply and demand zones, we're looking for price action, a drastic move on price action, a quick move. Okay, but we also want it to break previous demand in a either supply or demand, depending on which direction it's going. So as you can see on this one, we have a really nice move down. Okay, it broke through this demand here, it broke through this demand here, so it broke right through, quickly broke through all of that demand. So that typically would make this a real strong supply zone right up here. That's the kind of zones you're really looking for. Okay, if we look at this red zone right here, okay, you may be tempted to draw that as a zone because you have pretty decent price action. It's not moving up as fast as this is moving down, but pretty decent price action in the way it broke through previous supply. Okay, but the reason you wouldn't plot this as a demand zone is because this is actually a touch of a previous supply zone, or demand zone, I'm sorry. So this blue cyan down here was our demand zone from way back, probably a couple weeks back. Okay, so now this could have been a good trade here. We could have possibly taken this trade, except it was 2 o'clock in the morning, so we wouldn't have taken that trade. Whoops. Unless you're up at 2 o'clock in the morning, but normally you want to trade during the from about anywhere from 6 in the morning Central Time on. That's after the London markets have opened. Obviously, the volume gets a lot higher after the U.S. markets open, and that's at 8:30 Central Time. Okay, so this one sorry about that. This one we would not have plotted as zone. This red one. Okay, this red zone here is, again, you'd be tempted to draw that as a zone because price broke through previous supply. And when I say breakthrough supply, it doesn't have to be something that's strong enough supply that we would plot it as a supply zone, but anytime price changes direction, there's supply there. So that's what I'm talking about. We want to see it break through this level right here, but it moved up very slowly. Even well, I guess this was done overnight. So this is a slow, gradual move up. It's not a quick move like what we have coming down here. So you normally would not plot this as a demand zone. Now in a minute I'm going to show you why you would. Okay, but just strictly on doing it by price action, we would not plot this one as a demand zone. And the same thing here with this red one up here. We're not going to plot that as a supply zone because okay, sorry about that. I got a phone call, and then my granddaughter wanted me to take her fishing, so took a little break there. We were talking about this this top supply zone here. The reason we wouldn't plot this as a strong supply zone is mainly because price action didn't break through this demand down here. Okay, it came down here and just kind of went back and forth. We did have a nice, hourly strong move there, but it did not break through this level, so we would not plot this as a supply zone. As you can see, when price came back up into it, it did bounce a little bit in that area. And by the way, when you're looking at this with an hourly chart, what sometimes looks like it would be a losing trade, if you look at it on a 5-minute chart, you'll see that it did make a nice reversal. But this being an hourly chart, price could have come up into here, up to the top of the wick there, and it could have pulled all the way back down in here and then back up again and broke through. You really don't know by looking at the hourly chart, but usually you get enough of a move, and now this one wasn't a supply zone anyway, but assuming this was like this one over here. Okay, this was basically a failed trade. It looks like a failed trade here, but the way I trade, I would have either broken even or made just a little bit of money on this trade, because if you look at this on a 15-minute chart, you'll see there was like 3 bars that were just trading back and forth right in this area. Okay, when you take a trade off of a strong supply zone or demand zone, if you're sitting there going back and forth for a half hour, you're best just to get out of it. Wait till it cycles down where you can get out at a small profit and just close the trade. Not always, obviously, but your chances are that strong supply is not there anymore, because you're sitting there for a half hour, 45 minutes. The price hasn't moved away from it, so you're better off to get out of it. And then in this case, once it broke through, it pulled back down into this zone, and then you could have taken it for a nice trade. Okay, and then this zone right here, this red zone, you would be tempted to plot that as a demand zone because of this strong move down and strong move up. Okay, but this is actually a retest of this yellow zone right here. We got a strong demand zone here. Here's the price level we're looking for it to break through, right up in this area right here. Okay, it broke through it, fairly rapidly. This isn't a super strong zone, because we had it trading sideways here for a couple hours, and then it shot up out of there. But as you can see, that came in for a nice trade there. And again, that trade would have to be off of confirmation, off of a either a 500 or 1,000 tick chart, or 5-minute chart, depending on which way you like to trade your shorter time frames. That's too much of a risk for me. Now maybe it's not for you, but you're looking. There's a $3 risk to the bottom of the zone there, and I like to keep mine around, or 3-point risk. I mean, I like to keep mine down to a point, allowing up to 1.5 points for slippage. Okay, now the reason this one would actually be considered a zone, and why we would take this trade where this green arrow is, this is the reason why I use TradingView. I haven't seen any other trading platforms that or chart platforms, I mean, that allow you to plot a volume analysis of just from one point to another. Most of them have one where it'll show it for the day, or actually, some of them have them where you can have a start point and end point, but it's real hard to manipulate with. Sierra Charts has a real good one, but I just couldn't deal with that charting package, so I gave that up. But basically what you do here is you right click and do insert indicator, and then you select volume profile, and then you do fixed range. Okay, and then it's kind of weird the way this works, but you just click on the fixed range, and then you close it there. Okay, now your cursor's set to select your start point and your end point. See where it says click to set a point? So what I'm gonna do is I'm gonna plot the volume analysis of this upswing right here. Okay, so to do that, I got to come down here, and then I end it at the top of it right there. Okay, so what these bars show is these show your volume, and so your peak volume is where this red line is right here. Okay, so then what I would do is I would put a red line, I would put a line right there, and normally I make these magenta. Okay, so I'll change the color of it up here to magenta, and I usually make them a little bit thicker. Okay, so that to me indicates a high volume line. Now this action right in here was overnight, so we ignore that, but this one's while the market's open. Okay, so because we had this volume peak going right through this zone here, then I would have gone ahead and made this a yellow zone, and I would have taken that trade off of it. As you can see, the bottom of that zone's at 24.1850, and it got within a point, so we could have just taken that trade without any confirmation. As soon as it got down into that area, we just go long, and you know, there's a nice from about 24, say 24.20 even, you know, back up to the top of this bar right here, 24.29. That's a 9 point move right there. So these are again, we're plotting big moves. So we're plotting a wave. I'm sorry. With this to see where the volume levels are. Now on this down move here, see how we have right here this wick here. You know, chances are this area right in here may be a supply zone, and you would see that by going down to a shorter time frame chart. That would be one way to do it. The other is if we change this volume bar to just cover this swing down. Okay, and there's really nothing there that stands out, you know, so we wouldn't do anything there. But when you see, I'm going to remove this out of the way, when you see something like this in this area right here, you may want to look at it in a shorter time frame to see if there isn't a you know, like a supply zone right there. Okay, and I did go in and look at this, and there was not one. It turns out it did make a move, but it's not one that I would have plotted. Okay, so one other thing that I wanted to mention, if you do use tick charts, which I would recommend you using tick charts for your short time frame instead of a 5-minute chart, and the main reason is for when price is moving fast, you get a lot of better feel for what's going on. But I've seen people make mistakes where they will plot their supply and demand zones off of tick charts, and you don't want to do that. The reason is a tick chart, if you're not familiar with what it is, it's one bar. Like if you have a 1,000 tick chart, then that's one bar for every 1,000 trades. Okay, so during the night, when you have very little volume going on, but price can make a big swing, then you end up with big long bars like this that are really meaningless, and it'll fool you. It'll make you think there's a strong supply or demand zone there, and there really isn't. So never plot your supply and demand zones off of a tick chart. Always off of a you know, a minute chart or an hour chart or a daily chart. Okay, and again, like I said, we got 1, 2, 3, 4, 5, 6, 7, 8 trades in 14 days. You know, that's not real good. They were this one was a questionable one. You would have made some money on it. 44. You could have made close to 5 points on it, but you'd had to caught it just right. This one you would have broken even or made a little bit, or if you're a set and forget type of trader, then you would have got stopped out on this one. But the other trades were winning trades. And I just noticed I missed one other thing as to why we have this bar here. So again, it's the same thing with this volume analysis. I'm going to stick that in there again. Fixed range. Okay, if we take this downtrend right here, okay, there we go. Okay, again, see where we have, you know, in this wave right here. Okay, we have our peak right here. Okay, so I'm going to put that volume or that magenta bar right on that peak. And as you can see, I mean, that one traded right to the money. I mean, it hit it and bounced off for what, 24.29 down to, you know, there's 9 points right there. Now I probably would have only traded it down to this level right here. As soon as it hit that, I'd have probably stopped out because we're in an uptrend. But still, even to that, that's 8 points. You know, that's a nice trade. Actually, I take that back. I apologize. That's actually in the middle of the night. So if you want to trade in the middle of the night, you could have made money on that trade. But anyway, this just shows you, you know, how powerful this volume analysis tool can be. And again, all you're doing is, and by the way, if you want to move this, click on the bar on the volume bars itself, so it highlights this, and you can move this to whatever area you want to check. So if I want to do this this wave up, starting from right here up to here. Okay, well here we got a high volume right in here, so we really would want to plot a demand zone. Well, our volume's going to be right there, and our demand zone is going to cover probably this area right in here. Okay, so we have a demand zone down here, so we got a nice move out of there. Once these, you can see that this one actually this one did come during the day, so we could have taken this one. Okay, there's where it came at. Looks like 1 o'clock in the afternoon. Okay, so again, this one's not really a zone, so I'm going to remove that. I would probably be tempted to put a zone right here too, because we have this sideways action and then it just took off of there, and we did have a high volume point that it popped off of twice. So I would probably have a zone there. I'd be a little bit careful about it. I'd probably want to see some confirmation, but there's probably a good chance that that's going to hold up when price comes down too. And again, here, this is today's action. You can actually see we had a pullback right here at 7 o'clock back into this zone. But I would still probably leave this here and look for a pullback back down into this zone again too. So again, this is the hourly chart. I'm going to pause this video and set up a 15-minute chart, and then we'll continue. Okay, I just switched the hourly chart to a 15-minute chart, and it kept all my zones. I wasn't sure if it was going to do that or not. And here's the two that we did right at the end. Okay, I put this one in because of this this volume thing here, and you can see, looking at it on a 15-minute chart, that's a nice strong move up. So we would keep that one. This one down here that we had plotted on the hourly chart, again, if you look at it on the 15-minute chart, I just all of a sudden don't like this one as much. Oh, I did this because of volume too, so I would go ahead and keep this here, but it's likely to bounce off of this one, and that actually you could probably even draw it more like that. Okay, so a pull back down into this area is probably going to be a good trade. Okay, I'm gonna get rid of all this stuff here real quick. Even though you would want to keep those in there, I just don't want to clutter it up. Okay, and here we are on a 15-minute chart, and these, you know, the principles are all still the same. Okay, we've got right here, I'm going to blow this up a little bit. Okay, we've got a nice move down. Okay, it broke through previous the previous pivot point or previous demand right here. Okay, and we're in a nice downtrend on the 15-minute chart. So these are your ideal trades right here. This is what you're looking for. Okay, look at that's a, you know, that one we can do without confirmation because we're only, you know, we're less than a point away from the top of that zone. So as soon as price comes back up in there, you just take it and you put your stop just up a little bit above it. Okay, we're trading in the direction of the 15-minute trend on the 15-minute chart. So I mean that's perfect. These are what you're looking for. Okay, and again, this one broke through this one. So if it was the same day, which is, you know, it's not likely even to get back up to the same day, because remember this is actually part of this one. Okay, so you would be a little more hesitant about taking it the next one, but we're off into another day here, and by the time it breaks up through there, it's the following day. So actually the way this would be plotted would be like this. I'm sorry here, we would have this like this, and then we would put another one, because we did have a nice move away from that, we'd have another one like that, and that would be blue, and we would want to see confirmation. Once that broke through there, you wouldn't take that trade. But here, you know, then we have our next one. It's now going to be in red or magenta. Okay, because it broke through, it pulled back to this zone, and then you had a nice trade back up again. Okay, let's just see if we can find some other ones here. Okay, you may be tempted to do this one. Okay, because we had a nice move up. Okay, but look what happened here. This up move, it did not break this supply. If this price action would have went up into this area, then we would draw this as a demand zone. But we did not take it as a demand zone because it didn't break the previous supply. And let me just to make sure that you're clear on that. I think this will work. Okay, from here to here, it would have to break that level. Okay, so if this would have extended up past this point, then we would draw this as a demand zone. Okay, and you can see it did bounce a little bit off of it, but we don't count this as a strong demand zone because price action did not break through this point. Okay, another thing that I like to do is I like to watch, where we have price trading sideways, during the morning session, um, early, trading in a narrow range. And now this is just for the same day. Okay, well, in this case it actually worked right there. Okay, but I normally do this just for the same day. And actually, maybe on hourly chart, since this price action broke up through there, we would count that, we would leave this here. But let's just say this. Um, I'm sorry, I'm not trying to confuse you, but the reason we would go ahead and plot this one is because price action did come up and bust through this area, so we would do this as demand. Okay, but anyway, for the same day, when you have this price action, if after the market opens, which is about right here, okay, the market opens right here, if it takes off, if it pulls back down into this area, that's a real good long trade, okay, or short trade if it's the opposite. And I think if I remember right, today was a really good example of that. Yeah, this is a perfect example of what I'm talking about right here. Okay, we had sideways action in the morning. Okay, see this area right in here? Okay, it takes off. Okay, the market opens and it pulls right back down into this area. So you would go long right here. Okay, and you can see what a great trade that was. I mean, you're in at 8:30 in the morning, right when the market opens at 24.44 roughly, and I mean 24.44 to 16 points. Not that. I'm not sure that there's. That looks like that's probably an all-time high then. But and then I'll show you if we take this down to a 5-minute. I'll show you what I normally do. Okay, when I enter a trade like this, if I can get into a trade first thing in the morning like this, and it looks like we could have a good extended trend all day long. And I think one of you mentioned something like this. You trade 2 contracts and you'll take one of them off at 5 points and let the other one run. Well, this is what I would do. I look at the 5-minute chart, okay, and every time we get a cycle, I would move my stop. So once we had this this cycle here, I may have gotten out of my first one right up at this level, so 24.49, which is exactly like what you said, after 5 points, and then let the other one run. Let's see what we got here. Okay, so once we had this pivot here, then my stop would be set right below that pivot. Okay, then after we had this next pivot, my stop would get moved up to here. Okay, and then after we had this sideways action right here, I probably would have moved my stop up like right to here. It's not really a true pivot, but we had some sideways action. Again here, sideways action, and it shoots up again. I'd move my stop up to here. Okay, and we have another pivot. I'd move my stop up to here. And let's see. Okay, if you stayed in it and made another run, the market's getting about ready to close. There's 235 right there. Once you start starting to tank, you might get out, but regardless, I mean that's where you get stopped out right there. Okay, so that's how I move my stops. Another way you can do this, and I don't really like this way as well, but you can put a 50 period moving average on there. Format that to 50. Okay, and you basically use that 50 period moving average as your stop. And you can see that it actually bounced right off of here, and and kept heading back up. So In this particular case, not a whole lot of difference between the way I do it and using the 50 period moving average. There's a 1 point difference. The only difference is you would not have gotten stopped out here, because it has to break the 50 period moving average before you get stopped out. So you just kind of like just keep moving your stop up, you know, along this moving average, so that it's always just slightly below it. So those are the two ways, you know, that I have used for trying to catch a long run like this without getting stopped out of it. But I prefer the method of the cycles, and then if it trades sideways for a while, I'll move my stop like up to there, move my stop up to there. Okay, the other thing, this is a trade that I've never seen not work. It's just sometimes you gotta be a little gutsy to get into it, and I can show you a way to get around that too. But that's trading the news. Okay, you never want to be in a trade right before the news comes out, because it can move against you really bad. But if you look, I always go to Bloomberg.com and get the economic calendar, and see these little blue asterisk symbols. That means, or the blue stars, that means there's a high probability that this news is going to move the market, or this is news that can move the market. Okay, these are all in Eastern time. Usually have jobless claims on Thursday morning, and then you have well, this morning we had retail sales, consumer price, and industrial, but usually you have payrolls on Fridays. Okay, so Thursdays and Fridays is where you typically have the big moves, but like here at 10:30 we had a EIA petroleum status report that can tend to move the market. This week it looks like that's about it. Now they do have these indicators down here show you market moving indicator, merit extra attention. So these with the little square orange marks, they have a potential of moving the market. And this one right here, I think actually might have. There was a big move one day this week on that, but for sure, these where you have these blue stars, you don't want to be in a trade before that comes out. But here's how the trade works. Let's see, we're on a 5-minute chart. I'll see if I can find one. Well, I don't know where there's one right off the top of my head, but let's just say that this is one right here. Okay, this is 7:30 Central Time. News comes out, and we make a sharp move down. Okay, on a 15-minute chart, that's pretty much a straight down move there. And actually, I think this is the day. I think this is that news that I was referring to. Yes, it is. When I was showing you the other chart, this was a move on news. So there's two things I want you to notice on this. One is, when you have a big move like this because of news, you got to be real careful about making that a supply zone. Okay, now in this particular case, it did make a nice bounce off of it, but you got to be real careful about that, because news is just a knee-jerk reaction. Okay, and you can see that we're actually in an uptrend right here. We're in a confirmed uptrend. So when the news makes the market move against the current trend, this is even a better trade. But here's how the trade works. You hopefully have this move down into some type of a demand zone, but that's why this is a tricky trade too, because sometimes it doesn't. Okay, but the idea is, after it's done making its move, then chances are, and like I say, I've never seen this not work, there's where it's at when the news comes out. It gets back to that point the same day. Okay, and especially on these Friday morning ones, I have never seen this trade not work. And usually it's within a couple hours. So you can, in this case, especially when it's going against the trend. If it's going against the trend, which this one is, because we were in an uptrend, it's going against the trend. We got 9 o'clock by 10:30, so an hour and a half later, it was already back to it, and it back to the point it was when the news came out. This is an awesome trade if this comes down into a demand zone, or in the other case, up into a supply zone. And I don't know if this one actually is or not. We can just take a peek just for curiosity. That's not what I want. Okay, right there is where it doesn't look like that's any type of supply zone, at least based on the 5-minute chart, or demand zone, I mean. Okay, so you'd want to have some type of some type of confirmation that you have a reversal here, and usually price moves pretty quick with the news, and then it starts to reverse back up. But here's what you can do if it doesn't come down into a supply zone, or up into, or down into a demand zone, or up into a supply zone. Especially, actually, I would only do this if it was on a Friday. Okay, if you have the ability to trade futures options, you can sell an option contract on ES. Okay, so here's how it works. You would at 7:30 in the morning, those contracts expire. I don't remember exactly when they expire, but sometime in the afternoon they expire. But there's still a bunch of premium in here. So let's say we're at 24.39 here. So you sell a put on ES at this level right here, okay, with a $38 strike price. As soon as you think this is going to reverse, you give yourself a little bit of a buffer here, so you sell that. Let's say you can sell that for $5. Okay, then that would be the same thing as making 5 points on a contract if it expires worthless. So if you sell this for $5, it's actually going to be $500. Okay, because it's the equivalent of one contract. Okay, so as long as price stays above 24.38 by the end of the day, then you keep that entire $500. You collect that premium. Okay, so what you do as a stop is if it comes down and breaks through your strike price, then what you do is you just sell a contract. Okay, so that would be the same thing as having a covered call, and if you owned stock and you sold a call against it. Well, here you're selling a put, but you're selling a short position, so it's like a covered put. Okay, so you sell this, and I hope I said put when I said this before. You're going to sell a 24.38 put. If I said call, I apologize. But you're selling a 24.38 put, and as long as price stays above 24.38 at the end of the day, then you keep all that premium. So you'd make $500 if you sold it for $5, or if that was the price on it. Okay, the other thing is your volatility at that moment is going to be high because of news. Okay, so the option pricing is you could probably even get more than $5 for it. So what you do is if price breaks down through this, then you sell a contract, and then it doesn't matter what happens. It can keep going, it can go forever. You're still going to make that $5. Okay, because what you're losing in the price of the option, you're picking up in the price of the contract, and by the end of the day, that $5 premium is going to wither down to nothing. So you would still make that $5 if you sold a contract right when it hit this line or right when it broke through it, so maybe just a little bit less than $5, you know, the market could drop 50%. You're still going to make that $5. Okay, but the only thing you got to be careful about is then when that when it breaks through and you sell that contract, then if it comes back up above this line, you got to close out that position. And since you have 5 points to work with down here, you could do that 1 or 2 times and still make a profit on this trade. The only way you're going to lose money is if it just bounces back and forth above this line all day long, and every time you lose half a point or a point, then if it does that, you just close the trade out and get out of it. But when you get big moves like that, it's not likely that it's going to come down here and just sit here and oscillate across this point. Again, I normally do not draw supplier demand zones off of a 5-minute chart. You could if you wanted to, but normally I'll do them off of the 15-minute chart, looking for day stuff. And I'm going to end it here. You guys want to shoot me some questions, I can do another video and answer the questions you have. I know sometimes what seems really apparent to me does not come across in the videos as apparent to the people watching them. So shoot me some questions and I'll be happy to do another video.